Good afternoon, all. It's 4:33 p.m. Eastern Time on April 19th, 2023, on Wednesday. Welcome to another PMT webinar. Let's see. Housekeeping stuff real quick. I'm back. I'm good. May 18th, I'm going to go for another family event, which is my niece's, youngest niece wedding in Denver. So that's the 18th. I'll leave early in the morning on Thursday. I'll be back late Sunday. So I'll lose Thursday and Friday that week, 18th and 19th, which is the expiration for May. Okay. Let's see. She's the smart one. Yeah, I can't miss this one. I tried to convince her to come and take over HA, and she's just not into the market, So, but she works for a small firm now in Denver, and she got her master's in data science. Before that, she was a representative of Meg Whitman at HP for HP Women in Coding, and she's smart cookie. All right. ORB, I know you guys are asking that. First of all, I did publish an article. One of my programmers brought to my attention that was published today by MarketWatch. You want to take a look at it. This one. Okay, it's probably put on different ones. It says most day traders flop. An exception is ORB, and you should be doing about 46 per year. Well, now we only have 1 year so far, but we're at 365%. We were doing about 80% a month, but of course, we had two issues. December, market went really haywire. That's one. Two, we had too many people on. October and November were incredible months for OIB. Lesson here is when an advisor has a track record, please don't jump in at the top. Best time to join an advisor is when he's in deep trouble. Of course, we don't change our decision making. The machine does that. And if anything, the only thing we have a tweak is small is a vol, just the vol itself, the volatility. That's all. But as we say in the user guide, nobody can predict market texture tomorrow. Even somebody said, hey, time of the decade, what do you think about tomorrow? I said, I have no idea. The ORB trades 2 hours. How do I know next 2 hours what I'm going to do or next day? If you find somebody you can do with some consistency, let me know. We just can't. So for that, we put a disclaimer there. Anyhow, we also sent it in the email for you guys to take a look at. The other email we also sent you was the fact that you need to look at it more here on our YouTube channel. It is done. It's one of these down here. No, is that 7 months ago? No, it's more than that. No, I forget. Keep it. Hold on. There we go. Trader funding, 50% discount. I don't know what's up with them, but they're doing 80% now. So we send you a link with a different code. You hit it. I think 90% first month, just for you to come in, and then 80% after that. Also, I think they're much, much bigger than before, so they have more amortization of their GNA. So if you want to take advantage of it, they'll fund you. Depends on your service. I know a number of people who came to ORB, took that, and got funded. Like they were a month with ORB, got funded, and then boom, they went their merry way. So take a look at it. It's called Trader Funding. Email one out. If you're on an email list, which is by coming to this webinar, you become part of the email list. Should be there. But it's not instantaneous. If you just joined us, we're going to add you to our list like within a month or so. Why? We're not going to inundate you with emails. We have plenty of clients, so we're good. I hate pushy salesmen. I certainly don't want to be one myself. Aside from that, ORB version 5, where are we on that? First of all, what the top programmer there on that project, I have a little project to do for me, just for something very small, a couple of days max. In fast markets, managing your orders across multiple accounts is not an easy task. So we're writing a module. Again, we're trying to do this really not use TradeStation much because of their order processing. we want to do, because the dome sometimes freezes on us. Dome is, let's see, dome is this matrix. The one that you trade through, if you like, there we go. This is the dome, okay? It gets behind on the point you where you have, that is, how many positions you have, how many, what do you call it? How many, let's say you're long. What's your limits above? What's the stops below? It keeps changing on you as you add and subtract. In a fast market, it takes a while to update because it's got to go to Chicago, get it, come back to you. What we're building is a little module for my own use only. It's not for distribution. As for multiple accounts, they can consolidate all of that and not show one line at a time of a stop, one line at a time of a limit. No. By account telling me I got, let's say, 13 NQs open. All right, we got to, I have, 8 stops and 4 exits. That I need to know. Why? If you don't have a stop zone, they're going to tag you for over day session rate, and they're going to increase your percentage of margin, which I'm going through. I did on one account. It was March 9th. The SPV went down. I'm going to do it for you guys. They tagged me that day, and they were right. I was at a negative balance for the day. Okay. I had too much NQs on, so that's valid. Now they put me a month probation. They haven't tagged me since, so I should be coming off of that probably next week. We'll see. But nonetheless, I still need this module. Why? Because this module helps me to manage my dynamic risk. It's called actually DRM, Dynamic Risk Management, so that we know, for example, TradeStation gives you a little amount down there that says that purchasing power. Well, purchasing power goes negative and you're not getting margin calls. What does it tell you? It's tied to the overnight rate. They don't adjust for day trade rate. So it's really confusing. And if you're doing multiple accounts, I gotta have a calculator, HP on my left hand, with my left hand calculator, what's my true line in the sand, so I don't cross that. I don't want to be tagged anytime, whether you're on probation or not. You just don't want to be tagged, So, I mean, multiple accounts, it just adds to your nervousness when things are going against you. You won't need this when things are going for you. But remember, sometimes, hi Steve, how are you? That could be challenging, especially, there's a large account, it's NQ, it's moving, and you have size on. So we got to get that done. In the meantime, he has been behind anyway. He's doing 2 projects, one for a very large hedge fund, and then the other one's for TradeStation itself on the trading app. And both of those guys, actually, I'm told, want to take a look at what I'm doing. But I said, you know what, let me not talk about, that's not the reason. I don't care about a promise of future. I do need my tools, but finishing 5 will be a little bit lengthier than we want. But in the meantime, work on this. We're looking at sometime mid-May. Maybe May 1st, but I doubt it. Let's say first 10 days of May. So we're behind about 2 weeks, 3 weeks. That's the schedule he gave us. I usually let programmers do that, have their own schedule. And then at some point, I'll drop the hammer. Yeah, like, hey, you got to go. But he knows, he feels bad. He says, I got to get back on the thing. He is going through some negotiations with TradeStation. They'll be taking over the App Store, and that's major. So I appreciate that. And it could be his retirement if he does it right, because that gives you cash flow infinitely, so indefinitely. So you got to be, you can't be selfish all the time. So, but that's where we are at ORB. 4.9 is doing good. We did post our. We posted a link to you our ORB results. Why? Because Marshall is back. There's the results there, and there we go. By the way, this should be. Let's see. Hold on, I gotta add one word here for you guys. 1 second. Let me do that while you're here. It's gonna go and log in. So as a 2-factor authentication. Let me do that. Yes. Yes, that's me. Okay. It should say current Here, trade 3 MNQ. What? Why is it no more? I don't need more. What? My storage is not full. What are you talking about? Oh man, look, I'll do this later. Here's the word I need to add: current intraday margin. They're a little bit higher than normal. Okay, right now they jacked it up. Used to be 430. I think it's like 460 now. And then on the other side, they dropped on the NQ. So I don't know what this means. I'll get that to it. I'll see what I have. I don't think I have that kind of storage usage there on Google. So I'll take a look. Don't worry about it. But it's posted, and it was put on also on the was emailed and also put on TweetDeck or Twitter. Let's see. I think it was yesterday. There you go. ORB. There we go. Our 11-month ROI is at 365. This article says 46% per year. Now, of course, this could be compounded several years. I don't know. That's what we've done so far here on ORB. And we've had a couple of problems. July was a sideways. December was a sideways. And then on top of December, we had too many people, which spilled into January. We actually stopped. We said no NQs, very few MNQ. Those who were new, I told them go sidelines. We give priority to people who've been with us. We have two system houses run it, Stryker and Fox, both in Chicago, and they report. I don't even keep that data myself, this data. Marshall does it because he's got money there, and we decided from early on to be everything in the hand of third party. All I'm providing is the code. Why? By having more people involved, it's your checks and balance. So there's IB, which is a Stryker or a Fox. Then FCM is multiple. Through a Stryker, you have StoneX, you got Interactive, RG O'Brien, Iron Beam. It goes on and on. Basically, if you have involvement with Stryker, you don't change your account. They trade into your account for you. On Fox, it's done through TradeStation. Fox, to me, is a little bit more stable because there's no translation between. Execution of TradeStation code gets done through execution by TradeStation. So what we're doing is that the 5.0 does all what's called order ticket. We don't use it what's the strategy module. The reason for that is strategy modules we know have known issues, especially my two programs. Because they're ex TradeStation ELD guys, and I just waited until the non-compete expired. Then I went and approached them and said, hey, you want a Yop man? And they said, sure. So that here we are. And they've done a great job. I mean, they've been more than somebody working here. They have really added quality. They've added wisdom. They've added experience. And they know the mishaps of TradeStation. My friend Bijan Khezri, which did Bijan bands for us, for his CMT degree, way back in like 99, 98, 99, 2000, I forget what was it. As it was published, once he was approved, he's got his CMT. That's chartered market technician, I think it is. Whatever. I don't know what the C is. I forget. But that's to do with the MTA system, Market Technician Associations. He had such a hard time with TradeStation, and he was trying to get actually a role-based trading system together, and he gave up. He couldn't do it. Well, problem is that there were some issues, and can't bang my head against the wall. We gotta have our own solution, and nobody better than these two. So we're pushing into May, but the results have been good recently, and we're happy. Clients are happy. We're getting new signups back again. We have not pushed it. We will, but I was waiting for at least a month plus. Remember, this stuff finished mid-February. We released it March 6th, and we're a little bit over a month now. But probably by the end of a month, we'll start showcasing it more. Plus, I wanted Marshall back. The webinar with Marshall, I should say, talk about that too, this is very tenuous, to be upfront with you. It was supposed to be last week. I moved it 2 weeks. He's an amend, but he had time zone issues because they went to North Pole. South Pole. Both North Pole and South Pole, all time zones merged there, right? So, he's got a little bit of what do you call it? Vertigo. And he's running quite a bit. He's running very large real estate operation plus just his own stuff, and then and it trades a little bit. So some of it through OIB, some of it on his own. He does ES on his own, but mainly the real estate operations, and it's just we can't crowd him out. So we gotta wait for him to get a little bit better in time and place. This could go to May easily, so I'll know more this weekend. Okay, but don't count on this. As a matter of fact, a couple of guys called today saying, "Are we still on?" I said, "You can sign up. If the date changes, the sign up will tell you." Okay, and then there's a trigger: 3 days to go, 1 day to go, 1 hour to go. You get emails, or you can come here and check again. Members page. No need to log in. This is pre-login. It's called a paywall. This is before pre-paywall. So you come and take a look where we are. Okay. And this date, of course, will change to next week to 26. Okay, for Wednesdays. All these webinars are recorded and they're posted here under our videos, which is our YouTube channel. I don't know what's going on here. This one got a lot of hits compared to other ones. Okay, this is last week. All right. So with that said, that's the end of housekeeping. Let's move on. Okay. Earnings. I mean, what do you call it? Economic data. Earnings. We had Tesla. As a matter of fact, I was plotting Tesla earlier. We're in the earnings season now. The good news, Golden missed. I think BofA was okay, but as always, Jamie Dimon hit out of the ballpark. Here's what Tesla is doing right now, and it is having a little bit of a problem, about 5%. Remember, this is post-split, but that's where the number came. They're cutting back on their. They need to cut back a little bit on their inventory because they're making more cars than they're selling. That's not their model. This is snippets I heard on Bloomberg, and so they're building inventory, which not they're used to. So that means the sales have a slowdown. Part of it is also competition, and globally. Everybody knows now they have to have an EV, so I think we may have seen swing high in a while, which was right here, end of March, and it was trading around closed at 207, which was a high. Notice it didn't get to 200 day, so not good. There you go. That's a little better look. You see, it actually didn't even get to 3 sigma. So this is a pressure. Yeah, that's all I can tell. And of course, it doesn't have the today's results in there yet. Say 179. That's not 179, is it? 173. That's the current value. What you see here is the closing at 4 p.m. But this is post earnings, and you do that in TradeStation by going to Data, Edit, go to Properties, and you got to put the session in 24 hours. Okay, you get regular or custom session. I run for futures. So as long as if you have futures, the stocks just stop trading after a certain point, but shows all of it, and then we open in the morning. All right. We have Microsoft coming up. What was it Nancy was talking about? Today was IBM, AA, LRCH, KMI, and STLD. Okay. And so that's what Nancy is watching. Okay. On PMT, the vols have come down. I'm going to comment on that too. Now I think I'm ready to put an option trade on. The problem with the option trade back then, I had to explain to a member saying, I said, if we're not giving you option trade, just trade a spot. That's a lot more money. I understand that. Trade smaller because the vols will eat you alive. But when you're, let me go here quickly. When the vols are this high and you put a trade on, you see that? Yes, we say go long, right? We're saying go long on the asset. Vols are dropping. Yes, you gain by this up, but you give it back on the vol because MIV is a second input. So we gotta wait for this to calm down a little bit. I'm saying, yes. You betcha. I'm drinking a lot of tea. Yes, and reading a lot of more Rumi. At least Admiral Tigo comes sits here with his Rumi and his what do you call it? What what do you call it? What his what's the Kindle on his Kindle? Now I'm trying to get him Audible. It's a little bit easier on it, but we're having a problem with the headset. we probably get him. We have to give him earbuds. Yeah, earbuds. That's where we are. Yes. Here's the problem we had on the volume. Paso. It was remarkably low. Yeah. So, and of course, when you go through this process, you get a lot of retailers scared away. It takes a while to come back. And so, what you have here in this regime, you're really up against these solutions, and they could be also intimidating. So, I mean, I was away one day, one trading day. Yesterday was not a good day for me. I made a couple of mistakes, got frustrated. Last week was fine. But prior to that was hit and miss. Why? Ball was just too high. So, and you could see the worse than vol what was wrong, because this is going to give you SPX. The problem was intraday for Nasdaq, it was bad. Forget these extra bars; these are wrong. They can be. We can't be trading those. But it's just to get the closes. It was just too high. So, but you don't know what the day you're going to have. That's the whole thing. You can't tell. So your choices becomes not what you trade, but really size and when do you come in at extreme points, which is pure risk management. So risk management becomes paramount. Okay? And thus, this module I've been thinking about talking to my couple of tech guys on the programming side. We've been kicking around, but we didn't want to get there. But this one includes getting the data not from a dome, not from your platform here, but from TradeStation Direct, okay, which shows by account, LES, all that stuff. You just put account number in, the rest of it propagates. What's the opening balance? Where are you mark to market? Instantly, okay, instant. And you're computing it here locally, but you're getting certain data from them. Every so often you have to inquire to make sure the accounts are correct. The volatility forced me to basically say, hey, I'm going to take a little smaller. I'm also on a probation on margin amount. So I took some money out because I didn't be tempted to give it away. And the question was, well, why are you doing this? I said, well, if you move my margin, I'll come back. And if you don't do it the way I want, I'll take everybody out. What? I said, yeah, I can put the code on some other platform if I want to. So, this is not David and Goliath. I don't believe in that. Okay, I take on anybody, so including TradeStation. So go to your huddle, do your thinking, see what's good for you, and that's it. I don't beg, I don't get on my knees. Never done that. So we'll see. I did something wrong. I agree with that. Give me a penalty. You've already given that. Fine. Put me back on normal after a month. I'm good. If you don't, I'll go somewhere else. That's simple. I don't think they were expecting that attitude, but oh well. Welcome to my America. Okay, timer chart. Let's get started with that. 3 minutes to 5, right? Yeah. Okay, we're slowly going up. I was trying to get ready to get short. It's not working, so I didn't put it on. We have divergences. You see divergences across the board. I'll show you more. But I think we're going to pull back. But here's the issue. How good is earnings and what's our multiple? And that's a big, big debate. Every night, all these talking heads on CNBC or Bloomberg come in and try to gauge that. Frankly, I don't know. But if we had gone and shorted it, we would be just losing theta. No good. So, what's the other shoe to drop? I don't see anything right now other than earnings. Maybe debt ceiling. But debt ceiling to me is just really, really pure politics. Everybody knows they're not going to let the credit go bad. It would be suicidal. We could be trading at 500 Dow. Yes, Dow. That means we'll all be unemployed. We won't even be able to get an insurance shop to sell insurance to each other. So this is the game. Aside from that, I really don't see anything on the horizon. Anyhow, so breadth trust is coming back up, even though McLaren Russell is not. You can see them both. We're still rising. We got a positive CI diffs. Up down volume is very low in terms of percentage. Near zero or better. I'm saying near one or better. It can't be zero because it's a divisor. But near one, which is neutral. So, okay. Canary in the coal mine chart. A little more view of Dow. I mean, this was a very good day for me, by the way. When we have either these days are good for me or these. Why? I'm a Momo trader. When it goes sideways, I get into trouble. But of course, I don't trade DJI. This is a 30 stocks only. I've looked at YM a few times, never traded it. Transportation heading up again at 50 bar. Not bad. It's been lagging a little bit, but it's re-engaging. The problem is really Russell. Look at that, Russell. Just doing nothing. And we're not going to go anywhere until that in the NASDAQ, until this is resolved. Part of the problem here is high interest rates. Small caps have a very high propensity to borrow because they don't have a lot of equity. They have some equipment, so they're marginable, if you will, or pledgeable. You can pledge them to a bank using UCC1, and along with cash and receivables, so you get a line of credit. Some industries use that. These are usually most established, not high flyers, which we have a lot of them. A lot of small caps are that. So Russell 2000. So they're very dependent on interest rates. Now they get into trouble first. Go here. They get into trouble first. You can see their peaks before. Look what that is. That's December 21. Before the interest rates go up, and they should be first out of the chute. So once Fed decides to say, hey, we want the fight against inflation, the regime is going to change. The interest rate regime is going to pop first. The problem is, I don't think that's very, very near. We still have a pretty good inflation environment, and on top of that, our real interest rates are still negative. That means interest rate minus inflation are still negative, and that's a problem. That's why I think the Fed governors plus the FRB bank presidents, Federal Reserve Bank presidents, as a whole, which comprise the FOMC, the 19 people in there, they're going to push a little bit higher. I think we're doing a little bit better on the labor side, but that's probably what they're looking at anyway, labor inflation. So to answer Gary, yes, sir. And don't forget Rumi, plus Rumi. You gotta read some Rumi. Admiral does, so sure. All right. Okay, next chart. Detrenders. Again, that's the definition of detrender is you're trying to detrend, so we're trying to figure out what the real push up and down is versus itself. The best way to do that is put a noise reduction, a moving average in there. Obviously, what comes most to aid money managers is and they're programmed that way. Because they're fundy guys, and then and some of them are quants, but they're not technical analyst types. So the chart they look at is this: is the differential between the current price minus 50 bar or minus 200 bar. Okay, this is a 50 bar, and you could see now this is almost zero. So 1 neutral, 3 long, 1 negative, 2 negative, 4 neutral, 5 neutral. So you got 5 neutrals, 2 negatives, and 1 neutral. Okay, we're getting a little bit better. When we were all 8 of them were positive, we dumped. Why? Because we're stretched too far. It's a pendulum, okay? And so the one I like to look at, as always, is I want to look at this, which is the Russell, but this way. One chart, you can see some history of what these rubber band points are. This one, the rubber band is super stretched. As you can see, we're not there. No way, no way. So we're just going back and forth a lot. All right, hold on. Oh, I'm going to bring this back. There you go. Okay, SP1 Momo. Long, long. The weekly has got a positive CI diffs. Weekly high and lows. We came up a tad yesterday, which is the highest one in a while, with a very little move there in terms of a range. And of course, they sold into it. This doesn't give me any signal. I usually come look at it here. If we get a high new 52 weeks low, then we are set up to ride up. I don't see it. We're too low here. And this is more detail of it. That's the daily board. This is the weekly. You could see. I mean, when we had major lows, we were pretty high up there. Look at that. 300 there. This was through COVID. So nothing close to that. Now, Momo is, if you look carefully, you got to look carefully now. We're within +1, +2. So this tells me forget about the short. We got to probably go up a little bit. But the short term is diverging. That's what I want to look at. This going up, this coming down. So I think we could have a problem. The issue is how short term it is. Why? Because it's still you have a bunch of new news. By the names that come up. So VX and VXO and VXN. No, I'm sorry, VXN and VIX. One second, I gotta do this. Okay. That's just a couple of backups the machines gotta do on the one of the video servers. Okay. Coming down pretty nicely. We're below 1 sigma. Okay. We'll see if we can get to -3. That's probably the top if we get there, probably. But it's heading south now, so the assets should go up. And we have some resistance here to go through, like this area. That's 41.95, say 42. 200 is going to be difficult. So we got about 50 handles to go up, 40 handles to go up. But the odds are, here's the problem. We can drop down to here. So would you take 200 or would you get 40? That's the odds we're working with. So stay tuned. Who knows? And this is Russell. Russell Ball is also dropping faster, so you can see from the peak to here, from 35 to 29. These two, of course, run the VXO model, which is the original VIX by Dr. Whaley. This is the one that the market makers has a chance to play with different strikes or times because of higher volume. It's still used in the calculation. To me, it's ludicrous. But, hey, I reserve my rights to free speech. Yeah. Even though Sibo doesn't want to hear that from me. Hold on. Yeah. I should have put call for SIPO and CME, and I think it was ISC, whatever it was, because they're public and they have a stock, and the stock has options. They begged me. They said, Fari, I told them I agree. There was nothing to disagree. I said, you're right. And I said, they said, well, just don't make any comment about it. I said, I do, but I just drop it from our data collection. I don't want to be even tempted. Yeah, but yeah, one of the guys who had gone public was sort of a brokerage alliances, the trading and broker and all that. And they would interface with me, but if I was going to be co-sponsored, let's say by Option Express or TD Ameritrade, you had to go through them if anything CME was involved. Well, at that time I was making some. He had seen my put call ratios. He had access. And looks at CME was on a sell. Boy, did he go nuts! Like what? I said, I don't tell it what to do. These are the parameters. This is the numbers. There's something happening in your option activity that says it's a sell. Well, he said, do you think it's going to come back? I said, I have no idea. I don't know your stock. I don't trade it. Yeah, anyhow, the poor guy tried to. It would put up like $2 above the market orders every day, and it sank and sank and sank. And so we turned a good friendship into a little bizarre issue. And I just told him, listen, Let's just take the list off. Yeah, I don't set the parameters. We just report what the data say. It's the same algorithm. Same algorithm said Microsoft is going to go up. Same algorithm that said who was the guy with $6,000 shower curtain? Kozlowski. Yeah, these guys. It flagged them. It's the same thing. We don't go there and pick on anybody. It's just what the data showed. So, treasuries. Okay, treasuries have come up. They hit a little bit of a ceiling here today. Well, let's see how long it holds. But this is the post SVB issue. We just got hammered down, mainly because we have a default. When a big name goes down, and you got to accept it, it was 19. What do you call it? 19th on the list of banks in the U.S. As a matter of fact, while in the Bay Area, I have a couple of friends who are in there. I mean, cousins, I should say, who are in high-tech business, and one of them, which they do high-speed non-volatile RAMs for defense and for depending on NASA, all their cash, they're private, all their cash, account receivable, everything was at SVB. So that was come to Jesus meeting for them that weekend. I said, what did you do? He goes, nothing. I got up, I couldn't sleep much Friday night after it was taken over that day. So got up Saturday morning and went to work. I said, and he goes, I sat there until like Sunday night. I said, well, how do you sleep? He said, oh, I found a couch. These guys, I mean, he's the middle manager, not the C-suite, corporate suite, but right below that. He came from Markov. He's a mechanic, he's a nuts and bolts guy. And went to Michigan, but he did very well. I don't know. You should see his place in Los Altos Hills. Anyhow, poor guy. He says, the officers were just livid. They didn't know what's going to happen. So they're lucky. This is the relief came. They knew the uninsured are going to have a stopgap by Treasury. Yeah. So anyhow, all right. We rolled today. Today was the last day of J contract. It settled this morning around, I don't know what it was. It was right by 9 o'clock, I think it settled. And so, but we've already rolled to K contract as discussed last week. That's our 3 months spread. So we're long May, short Q, which is August. Month 5 minus month 8. Yeah, of course, 4 weeks from now will be June, long June, and short July. Short September, and so on and so forth. And you can see that's what we're looking at right now is a Z contract. So that's our term structure of volatility right now. Okay, and the differential now is about -3, so we're still rising a little bit. The bottoms are going to be put in near zero, obviously, and this wasn't necessarily a good bottom, but we should go back. We should go back to let's go back to there we go. This is SVB. So I need to open up a little bit more. It's always good practice to go back and say, hey, what was this chart? What were these charts saying or showing at time X in the past? And so, okay, let's see. Yes. So here's SVB. Oh, still no good? Wait a second. March 9th. Okay, that doesn't like me. All right, so let's do it one more time. We'll do another month to it. Sorry, guys. Let's say 50 days. Okay, we'll go back 50 days. In 21 trading days. All right. Now, part of the contract there on ES will not be lead. It doesn't matter. I'm looking at the VIX futures. Yeah. In other words, it was a different contract back then. If you go to, there we go. Here's where SVB just went nuts. Okay, and that was the low. You could see what the readings were actually positive. See that? Yeah, we get positive. When you get to positive, the low is in. And boom, 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 and then it took off. Now it's been lower, lower highs. Okay? But that's where we are now. So, what does it mean? We're not at the top yet, and we're above the bottom. It's an inverse asset, right? VIX. So you have to think of it in reversing your head. Stock RSI, we have it, as discussed, we have a rendezvous point. As we're pounding the table saying, we're the rendezvous point, where these three colors get awfully close to each other on a fear and greed level. So I think the move up may be near completion. The issue is what's the shooter drop, what's a catalyst. I always say it's good to have a bias toward the market. You should double check it. You should take your own emotions out of it. But at the end of the day, what you're looking for is a catalyst. Markets just don't drop or just don't go up. Something comes to the market, has to reprice it. Because of repricing, also the fact that it's discounted cash flow, right? It discounts the future. So you got to look at for that event where it gets set up ready for it to go down. Otherwise, we could sit here for a while. We could go through another one like this. So we got to get there. We're just too far. SP2, my loyal indicator for years and years and decades, more than 2 decades now, this has done its job. It also says we are overbought in that area, but look at it also divergence. Much higher value on, here's how you look at that. That's what the value was. We're higher value, obviously. This is the value then. We're definitely above that. But look how far below SP2 is. So all signals say that we're close. The issue is what's the catalyst. Yeah. May jump in a little bit ahead with a tighter stop than normal, but we'll see. But I'm not too keen on doing a FOMO, fear of missing out. I mean, FOMO has never worked for me. So, okay, this is get charted on the TradeStation. It's posted by Admiral Tico, and the whole issue is really, do you Tico? If you don't Tico, then you got a problem. Here's the chart by him. There we go. These charts. We post them a couple of times a day. Good interpretations from Norseman 1 and Walter Deemer. And then also there's a reading material there you got to read. Okay. We found that answers most of the questions. And that's Larry's Paul Desmond, excuse me, and which is posted there in PDF form for you. We download it and we're hosting it ourselves on Amazon because I got tired of emailing it. I just post it every time. Well, that's much faster and easier for everybody. So take a look at the chart. You can see where we are. Take what's doing. We're not doing anything up or down. That's a problem. That's extreme. Again, indicators work best at extremes. We kind of went down to the bottom again. So no signal. Larry's what do you call it? Buying power index. Let's see. Long. That's EMD, which is mid cap. S&P, not small cap, mid cap. S&P long, mid cap long. Russell, not a small cap. It's long also, and of course, we had a whipsaw there, long and short. NQ. Now, Peter trades this, Peter Cook, but he avoids the shorts. He trades the long side only, which is fine. But, to each to his own. I don't sit there to judge. Excuse me. Okay, now, come. Oh, there you go. Come fly with me. There you go. That's a C and that's a E models. Did not work on either of them. I worked on A and B. Okay, but nonetheless, they're my babies. Because before A and B, you couldn't have any of these. Yeah. Okay. One more chart. Okay. Last but not least, let's see where we are. Is this updated? Yes, April 19th, 4154 was the close. Yes. Okay. We're heading up a tad. Small noticeable move. We're at 62%. We're broken above 55. looked like we were going back in to test it, but it pulled out. And so, do I put a signal here? Not really. It's just, it'll be more noticeable if we go a little bit higher, but at least it didn't go lower. Between 45 and 55, remember, it's 0 to 100. It's a no man's land with a 50-year center line. One chart I may have forgotten, SQ. Let's go there. Sorry, guys. I don't know how I did that. It's in the charts. Hold on. There we go. Okay, let's go to SQ. I missed that. There we go. Here's the SQ. Okay. Maybe we did talk about it. I don't know. But look at double top there. It was rising pretty fast, saying, yes, there's maybe a protection play that we need that. This says the at the money of SPX options on the put side. What kind of interest is in there? And of course, you really need to read the PDF from SQ from S&P. I'm sorry, from the SPX research section of SIBO. When we dropped on hard, last couple of days, gave it all back. So, it is what it is. It says the big boys are a little bit complacent again. They don't think we're going to go down. Otherwise, they would buy protection. And usually, you're talking about 2 to 3 standard deviations. So they want to be establishing something, let's say around 38.50, and then maybe 37.90 area. Okay. So far, doesn't show it's happening yet. Actually, they probably sold some. They probably under this pressure, especially that bar, they covered those long puts they had because Zoom was becoming worthless. But that's what this says to me. Signal is very good if you get it, which is above these areas, above what's, and hopefully both sigma level count and also absolute level, which is 170.55. The last signal gave it was in July of 21. Okay, that's my spiel. Bottom line, we're on a watch for a short. I think the risk reward says we probably have another 40, 50 handles up, but we could have a couple of hundreds at least downside. So pick your own poison. So that's where we are. Okay. We'll probably do a webinar on Tiger Shark once ready. 5-0. Not upside, not Tiger Shark. Or no discussion on Tiger Shark. Upside. Or 5-0 when it's ready. But it'll be sometime in May. Because the news today was, okay, I'll get the other piece done for you, but I'm just so behind. I need a clemency. I said, hold on, what do you mean? He goes, give me something else to do that's smaller. Get out of the way so I feel good about it while he's in the middle of some negotiations. And you know what? He's a pretty smart cookie, went to Brown, and darn good coder. Look, he put us back on a map on the 491, but 5-0 is a different animal. It's its own beast. And so for that, we want to make sure we get a good job, do a good job. And 491 is taking care of us. So we're fine. Should we get some new signups? And that's good news. It's called acceptance, and so on and so forth. Again, this is being recorded. I welcome your questions here. And if not, then I bid you farewell, and then we'll do another one next week. We're trying to keep these short and sweet, under an hour. And again, this will be recasted because I don't think Marshall is ready. He's a very good guy. He's a very sharp guy. He's got a lot of experience trading ES. One of the people I know. If I was going to pick 5 guys who know how to trade ES, he's one of them. Oh, and he's been that way for years. I think. Of course, back then we were all trading the SP, which was the large contract, but the moves were small, and was $500 a point. Yeah, that was big. Yes, Des, I need some rest. Sleep is an issue. I was doing so good on T, but because of the flight back and also jet lag, I switched back to coffee and it's no good. Now you get saturated with it. Okay, any other questions? I'm sorry we don't have an event here, but I can't have you come here and me showing you the events. It has to be event driven, and it's not there right now. So you know if it's there, we get it. You saw what we did on March 10th. So that's the proof. Okay. I bid you guys all farewell. We'll see you next week on the 26th, which is the Wednesday. Tuesday, 25th was going to be postponed. Maybe a week, maybe 2 weeks. We'll see. Okay. Thank you. It's going to be post-processed and then posted to YouTube. Again, I urge you to subscribe to YouTube. Thanks.